Now on page 2414, we got figure 24.3, treatment of financing on statements of adjustments. All right, here. So there's this diagram here. New mortgage by mortgage company or other third-party lender. Now this, for the buyer, it's a credit. It's a happy face because it's amount of loan. For the seller, there's nothing. Now the vendor take-back mortgage, for the buyer, it's a happy face. It's a positive amount of loan. For the seller, it's a debit. It's amount of loan. The VTB will be negative. The buyer assumption of the seller's existing mortgage, that will be a happy face. For the buyer, it'll be a credit, outstanding mortgage balance. For the seller, it'll be a debit. It'll be an outstanding mortgage balance. It'll be a frown, negative. Existing seller's mortgage to be paid off or discharged on closing. The buyer, there's nothing. Doesn't affect the buyer. But for the seller, it'll be a debit. It'll be a frown, a negative thing, because they have to pay it off. Outstanding mortgage balance for their own personal mortgage. Taxes. The amount of the taxes for the year must be apportioned between the parties as of the adjustment date. Remember that property taxes are paid for a calendar year, even though they are usually, so calendar year meaning January 1st to December 31st, even though they're usually paid on July the 1st. Okay, so don't forget that. Refer to figure 24.4, which I'm going to do. If the property owner pays the taxes on July 1st, the property owner is paying for the period of January 1st to December 31st. So it's figure 24.4, taxes due for year one. So there's a diagram, there's a sort of a chart here. There's January going to December. In the middle of the year, we got taxes due for year one in July the 1st. Note, a property owner usually pays the taxes for the entire year partway through the year, so on July 1st. In the example above, the property owner would be paying the taxes 6 months in arrears and 6 months in advance. Kind of weird, huh? In Vancouver and in a few other municipalities, taxes are billed in 2 installments. However, they still represent the calendar year's taxes. Because this further complicates calculation, it's only necessary for the purposes of this course to calculate tax adjustments based on a July 1st payment date. Taxes previously paid by the seller. In this case, the buyer should reimburse the seller for that portion of the year from and including the adjustment date. Note, Clause 1 of the contract that provides that the buyer will assume and pay all taxes as of the adjustment date. Okay, the buyer's share will be a debit to the buyer, and so that'll be a negative, a frown, and will increase the amount of cash the buyer will owe. This same amount will also be a credit to the seller, a happy face, and will increase the amount due to him or her. Thus, the same amount will appear on both statements. If the adjustment date was September 1st and the seller had to pay the taxes for the year, then the seller would receive a refund from the buyer for the taxes from September the 1st to December the 31st. Returning to our previous example, we add the following facts. So this is blue. The seller has paid the annual taxes for the property in the amount of $1,650. The adjustment date is October the 6th. So we're going to get out of that blue thing. The statements will appear as follows. So here's the buyer's statements of adjustment. Purchase price is a frown, a debit, 100 grand. Nothing in the credits column. Deposit paid is in the credits column, a happy face, 47 grand. Assumption of the first, deposit paid, yeah. Assumption of the first mortgage will also be in the happy face, credits column on the right, 47 grand. Conveyancing fees, $550 will be a debit for the buyer because they have to pay it. It's a negative, it's a frown. Now, the buyer's share of taxes will be October 6th, because that's when the adjustment date is, to December the 31st. So that will basically be 87 out of 365 days. So we go 87 over 365, and then we times it by 1,650, because that's the year total. And it comes out as a debit, a frowny face, something that the buyer owes $393.29. And so the balance due to complete, which means the balance due to complete is the debits, all the debits, minus the credits, will come to $43,943.29. Now we go to the seller's statements of adjustments. So the sale price will be in the happy face, that will be credit, 100 grand. And so assumption of the first mortgage, that will be a negative, a frowny face in the left column, 47 grand debits. Real estate commission will also be a negative debit, frowny face, 5 grand, left column. Left column also would be discharge of second mortgage, so that is a negative debit, frowny face, 22 grand. And then we got legal fees for the discharge would be $130. That's a negative frowny face debit, left column. Now we got the buyer's share of the tax. So that's something the buyer is going to have to pay. So it's a happy face to the seller. That's a credit. So $393.29. And that goes from October the 6th to December the 31st. Remember, that was like 87 out of 365 days. And we take the 87 over 365, and then we times it by, we times it by 1,650. Now the cash proceeds of sale, which is basically credits minus debit, will come out to $26,263.29. And both columns, debits and credits, they equal out to $100,000 with $393.29. Note 1, the taxes are calculated on a per diem, a daily basis. The contract provides for the buyer to accept responsibility for the day of adjustment. Accordingly, the buyer must pay for 26 days in October, 30 in November, and 31 days in December. And I heard somebody say before, yeah, or maybe it's in the Real Smart Train, they say it's a good thing to memorize the days of the year, like how many days per month. Okay, anyways, in a leap year, the conveyancer will use 366 days per year. Now, note 2, since the seller's already paid the taxes from January 1st to December the 31st, the seller must be credited with the buyer's share from October 6th to December 31st. Similarly, the buyer must be debited for that amount because the seller has paid for the buyer's share already. Taxes to be paid in the future by the buyer. In this case, the same amount will appear on both statements. The seller's share from January 1st to the adjustment date will be a debit. That means a frowny face, something owing on the seller's statement, and will reduce the cash proceeds due to them. The same amount will be credited to the buyer and will thereby reduce the amount required to complete from the buyer. In this way, the seller pays the buyer in advance of the tax payment for the portion of the year prior to the adjustment date. If the amount of taxes is not yet known, it must be estimated either by reference to the previous year's taxes or, if the assessments and tax rates are known, by a calculation. The facts of our previous example are altered as follows. The taxes are not yet due. This is the example in blue. The taxes are not yet due, but last year's taxes were $1,276, and it is expected that they will increase by 20%. The adjustment date is March the 17th. So now we got the statements, the buyer's statement of adjustment. So basically, in the frowny column, the debits on the left, we have the buyer's statement of adjustment. We got purchase price 100 grand. Deposit paid goes into the happy face credits on the right, 10 grand. Already paid the deposit. directly to the seller, of course. Assumption of the first mortgage, that also goes in the happy face. That's 47 grand is a credit. Now, conveyancing fees, the buyer has to pay. So that's in the debit column is $550. That's a frown. Now, the seller's share of estimated taxes, January 1st to March 16th. So that's 75 days, so 75 over 365 times the total year's taxes, $1,531.20. So basically, it was last year's taxes, $1,276 plus a 20% hike in the taxes. So that is a credit, a happy face thing on the right column of $314.63. So that's for the buyer. Because, I guess, the adjustment date was March 16th, which is the adjustment date. So basically, the buyer on July the 1st will have to pay. I'll just say buyer pays property taxes of $1,531.20 on July 1st. So, and gets reimbursed for January 1st to March 16th when he didn't live in the house, but previous owner did. And the previous owner basically has to pay those taxes from January 1st to the March 16th. All right, now the seller's statement of adjustments. The seller has a happy face credit, 100 grand on the right hand side, and has a whole bunch of, the rest are all negatives. 47 grand is debit, assumption of first mortgage. Real estate commission, 5 grand, debit negative, frowny face, left column. Discharge of second mortgage, 22 grand. Oh, legal fees for discharge, $130. Seller's share of estimated taxes, got to pay $314.63 for the time of January 1st to the March 31st, which is the adjustment date when the seller was living in the house. And cash proceeds of the sale, which are the credits minus the debits, comes out to $25,555.37. And both the totals for the debits and credits column on the bottom are 100 grand. Notes: number 1, the taxes are estimated by adding 20% to last year's figures. Note 2, because the buyer is responsible for the date of adjustment, the seller must pay 31 days in January, 28 days in February, and 16 days in March. Or they could just use timeanddate.com website calculator. 3, when the actual tax bill is received, the parties may readjust. For example, if the taxes are higher, the seller will owe more. If they're lower, the buyer must pay back some money. The conveyance will have a note on the adjustment stating that this adjustment will be made directly between the seller and the buyer. Taxes due but not yet paid. So we're out of that. Those are statements. Taxes due but not yet paid. In these circumstances, the taxes will usually be paid out of the proceeds at the time of completion by the conveyancer. There are 2 ways to make the adjustments in this situation. See note 1 of seller statement adjustment below for the second method. I'll read it ahead. It's also acceptable to make this adjustment by charging the seller with the penalty, plus if they didn't pay, plus the taxes from January 1st to August 12, which is another statement of August 13th would be the adjustment day. Sorry, I was wrong. the previous example was March 17th, the adjustment date, because and then the seller has to pay from January 1st to March 16th. Okay, now in this new example, which I'm going to read to you in a bit, the adjustment day is August 13th. Okay. Alrighty then. So basically, it's acceptable to make this adjustment by charging the seller with the penalty plus the taxes from January 1st to August the 12th, and charging the buyer for the taxes from August 13th to December 31st. The seller's statement would record a single debit, and the buyer's statement would also record a single debit. Okay, so let me go back to 2416 at the bottom here. The method which seems the most straightforward is first to charge the taxes and any penalty to the seller. This amount would be a debit on the seller's statement. Once the taxes have been paid against the seller and notionally paid, the adjustment proceeds exactly as if the taxes had actually been paid by the seller. The portion of taxes for the period from the adjustment date on is a debit to the buyer and credit to the seller. Note, however, that the seller is responsible for the full amount of any penalty. It is not adjusted because only the seller is liable to pay and failed to do so in a timely manner. The conveyancer would then proceed to pay the outstanding taxes plus the penalty. Our previous example can now be altered. This is in blue. The taxes in the amount of $1,651 are due, but have not been paid. A penalty of $65 is owing. The adjustment date is August the 13th. Now, we got a buyer statement of adjustment. We've got a debit with the frown. Purchase price, $100,000. That's a debit. Deposit paid, that's all the way in the right-hand column. It's a credit, happy face, $10,000. Assumption of first mortgage is $47,000. That's a happy face. Conveyancing fees, that's negative, that's a debit, frown. Left column, $550. Then we got the buyer's share of the taxes, August the 13th to December the 31st, because we're paying after July the 1st. I mean, that's the adjustment date. Out of 365 days is 141 days. So, you times that, 141 over 365, and you times it by the total taxes, which is $1,651. And then finally, the balance due to complete, or the debits minus the credits, is $44,187.78. Then we go to the seller's statement of adjustments. The sale price is in the happy column, the credits, so that is $100,000. Now we got a bunch of negatives, a bunch of frownies. Assumption of the first mortgage in the debit column left, $47,000. Real estate commission, $5,000. Discharge of second mortgage, $22,000. Legal fees for discharge, $130. Now here we go with the annual taxes and penalty. So annual taxes is $1651 plus penalty of $65. So the buyer's share of the taxes will be August the 13th to December 31st. We already said that. And so this will appear as a credit to the seller because the seller's already paid it. So that's in the happy face column. $637.78. This is what the buyer got to pay the seller. And then finally, the cash proceeds of the sale, the credit minus the debits, is $27,791.48.